Welcome to Money Talk with Aaron Ricketts, presented by Ricketts & Associates, 3245 North Adrian Highway, Suite F. The opinions voiced on Money Talk are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. Aaron's back with us in the studio. Hi, Aaron.
Hey, John.
Well, same old, I guess, right? We still got the craziness, so we gotta
Still going.
keep talking about it. It's important stuff for a lot of people.
Right. Trying to get up-to-date information as soon as we can, and things have, it seems, slowed a bit when it comes to market news and economic news. And I say slowed a bit. It was so in our face, a week ago and 2 weeks ago, even 3 weeks ago, that this is still high-level information coming in every day, but it's half of what it was the last 2 or 3 weeks. So that certainly helped us in our office and kind of gives us, each day or each week we get through this, it's going to give us more information and more reliable information. But when it comes to the market, you just never know, where we are and what might happen in the short term. We know over the long term that this thing will turn around and we'll be, back to some normalcy. Who knows, 12 months, year, 2 years from now, whenever that is. But we know we'll look back and probably have some of those woulda, shoulda, coulda moments, and then we're also going to, hash and rehash everything that our government did, our politicians did, our scientists did. You know how that is. You're in that business, John.
Oh, right, rehashing, yeah. It's my corned beef hash, my favorite.
So let me just throw out some of the things, again, that we've been talking about the last couple weeks. And some of it's just a reminder, and other things, it's good to hear stuff over and over again in the repetitive form, and helps me learn. It helps a lot of people remember, too. Just remember that a severe market downturn is not uncommon. This is how bear markets act, and this is how markets react to uncertainty. And so having a quick fall, deep fall, is very common. It happens almost every time there is a market decline. It doesn't happen over long periods of time. It happens quick and fast. Recoveries happen typically, now in the early recovery days, they might jump significantly like we've seen in the last week or so. But typically, fast drops are common, and we know this from history. Bear markets are fast and furious on the downside. In the short term, we know that this is frustrating, this because it's unknown, and that's why the market is, doing what it's doing. But we are sure that better times are to come, and along with, everybody listening, I'm hoping it's sooner than later, right? That we can get back to some normalcy. So a couple things that happened from the huge CARES bill that was passed, that multi-trillion-dollar bill. As a reminder, you do not have to take your required minimum distribution for 2020. And this is for those that are 72 or older, that may be required to take that distribution from their retirement accounts. You do not have to take it. Just so people know, they did this in 2008 also. They suspended required minimum distributions. So this is not something that's a first. And those stimulus checks that you're supposed to get, I did read somewhere that it was possible that some would get them this last week, but I'm assuming it's going to be starting this next week. So those $1,200 checks, and there's some rules about that, how you're going to get them. But one question that we've had in our office, and it comes up with a lot of the retirees we work with, several don't file tax returns because they just don't have to because of their their main income or source of income is Social Security, then their other income doesn't reach a taxable level. So many of those had questioned, do we need to file a tax return, because that's how maybe they were going to identify those that are going to get a stimulus check. So you do not have to file if you have not filed and you were one of those Social Security receivers. So they will go back and look in those records and then send those people checks. Because it did happen back in 2008 when they sent out, in 2009 when they sent out those stimulus checks. Same thing happened, or that happened at the time where some people didn't file and didn't receive checks, and it was mainly seniors because they had not filed. So that's not an issue this time. They're going to send you a check, so be looking for that in the coming weeks. Talking about the market more, on some road to recovery, and my company, LPL Financial, has an LPL Research weekly market commentary, but they actually put something out every day. And what they have been working off of is these 5 bullet points. And the first one is, and I'm glad it's the first one, that it's a signal to a market recovery. This is what these 5 bullet points are. Number 1 is there's confidence in the timing of the peak of the COVID-19 cases in the United States. So, when we hit that curve or that plateau, it's possibly, and I'm sure it's better than having more cases, right? When we have the same number of cases or fewer cases, and it's going to be a sign, I'm sure, just like in Europe and in China and other places where they have plateaued and they've already they're in talks of opening up their countries again. So that's number 1. And is it time to buy, or is it time to make sure that you're still in the market? And that we're still monitoring daily. And you can see that, right, with what's happened in the market in the last 2 or 3 weeks, but especially in the last week, we've seen quite the changes in volatility is still there, but the change in the downside has not been there. I mean, it's changed to the upside, but don't be too confident that it will stay that way, because it very well could turn the other way, because we're at least a few weeks, right, before some of the areas in this country return to normal, and especially in some of the bigger cities, they're going to be a little bit longer, most likely. But anyway, confidence in the timing of the peak of the COVID-19 cases. So that's a big signal that we're on the road to recovery. Number 2 is the visibility and the probability and the severity of a U.S. recession. So we kind of know that we're already there in a recession. And I'm interested in, as probably the most of always have ever been, that economists seem to be, a lot of them, on the same page. You have some that say, this is going to be horrible. Then you have some that say, we're going to bounce back in a month. But for the most part, most economists are on the same page that, okay, recession is here. We don't know exactly how deep it is until we see the numbers in the next coming months. But we already see it and know it's going to happen, so we're already there. So that's a good sign or a signal that we've identified it, and we can start that recovery process. Number 3 is markets have priced in a U.S. recession. Well, we certainly know that has occurred, and I wrote some notes down here. From year to date, on March 23rd, the S&P 500, the 500 large companies, which most of us advisors benchmark of how the market is doing, was down 30%, minus 30%. Now, that's from year to date. I'm just giving you some simple numbers just to show. In 2 months and 3 weeks, the market declined 30%. Now, it had gone up even more so, and its high was somewhere in mid-February. But just so you know, and give you some reference here, year to date, the S&P 500 in its lowest was down 30% on March 23rd. 12 trading days later, April 8th, just a few days ago, the market was down year-to-date 14%. So it gained half what it had lost in 12 trading days. And it's a great example of why you need to stay invested. We can't time this market. Some people try. Maybe 1 out of 10,000 can beat it. But the rest of us, and even the best of the best, were kind of caught off guard again by where this virus was going to go and what it would cause and what the government's response was going to be. So think of those numbers, and that's just today. We could go back down to 30% and see that happen the next few weeks. There's no doubt in my mind that we're going to probably continue this struggle of up 3, 4, 5%, down 3, 4, 5%, up 3, 4, 5%, almost daily. Or we'll see swings of, the Dow being up 600, 800, 1,000 points, and then at the end of the day it's zero. It gained nothing or lost nothing, and vice versa. So we're going to continue to see this because the information, all the information that the market needs to calm itself is still not there. Plus there's other things going on, such as people making a profit. There are some out there that can get in at the very bottom, and of course they're going to probably sell off to try to get some of that gain, because making a 16% gain in 12 trading days is not a bad day at the office. But most people don't have that ability to do that. So that was number 3. Have we priced in a U.S. recession? And number 4 is sentiment and technical analysis indicate there's a limited number of sellers remaining, meaning everybody that could sell or wanted to sell has already sold. And it appears that everybody is there. So we're going to have some profit takers and stuff, just like I described a minute ago. But most of your sellers it's happened, and meaning, that's what pushes or moves the market, right? You got more sellers than buyers, it pushes the market down. You got more buyers and sellers, it pushes the market up, the individual stock price, that is. So we are already there, so that's a good sign. Number 5 is policy responses have been sufficient to restore confidence. I certainly believe that's the case with this multi-trillion-dollar bill, and it looks like they might pass another one. They're at least talking about it, right, in Congress. So that policy response happened right around the time at the bottom of the market. So you could see that it has responded, the market has responded pretty good for that, to make sure people, are going to be taken care of for at least 3 or 4 months through this shutdown or quarantine. It's quite the event that we're undertaking or going through, as you know. We got a couple minutes left, John.
Yeah, one of the questions I had is, will we begin to see the beginning of the turnaround when we begin to see a drop in the unemployment numbers?
That's a good question, and that has been a big part of the economists. There's different economists use different indicators, and many of them use the jobs reports. Many of them do, and it is interesting though to see a lot of them move away from that, because this is so unprecedented of how many losses we had of jobs in such a short time. And they're using these technical terms of furloughs and other words, right? Because they don't know how many people are going to go back to work right away. Let's say we're back in business on May 1st. Just picking a day. How many people are going to go back to work right away? Some the companies might not be ready for them. Orders might not be there. They're just going to stay on unemployment for some time. So I think they're more looking at the consumer spending side, because that'll push demand, right? When you push money into people's pockets, people have a lot of money in their pockets right now because they haven't spent anything. This all just happened in the last 3 weeks for the most part. So people got a check, a week or 2 weeks after they were done working, file for unemployment, and We know there's been a struggle there, not just in Michigan, but in many states, to give people money. But that will start flowing in, and many people are going to get, good sizable unemployment checks for a while. So they're going to be flush with cash and it's going to be available for them to spend. So once things get back to operational, people are going to spend that money. That's just the American way. So your question was about the
right.
Unemployment. I think many of the economists have moved away from that, and they're more focused on the consumer spending side to see when that's going to come back up, and then also see, what they call the GDP, which is a part of that spending, gross domestic product, because we're probably most likely going to see a 20 to 30% decline, which is historic. And then the projections are, by the third or fourth quarter this year, we're going to just, rebound from that. That's the goal, at least, from, the stimulus and trying to control this virus and get it done as quick as possible.
Well, if somebody out there's got some questions about their own particular situation, can they chat about them?
Give me a call, and I am in the office, and our staff is in the office. We're kind of doing some rotation. I'm here every day, all day. My number is 265-3540 if you need to talk.
Okay, Aaron. Well, we'll keep paddling through the uncharted waters.
We will. Thanks, John.
Thank you. Appreciate it. That's Money Talk with Aaron Ricketts, presented by Ricketts, Ricketts & Associates, 3245 North Adrian Highway, Suite L. The opinions voiced on Money Talk are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. Join us once again next week for Money Talk here on 103.9 WLEN.